In today's video, I'm going to reveal exactly when you can access your super tax-free. And you know what? It might actually be sooner than you think. Hi, how you doing? I'm Chris Strano, the founder of Super Guy, the place where Australians go to maximise their super and build their own retirement plan. If you're new here, make sure you hit that subscribe button and all the links related to this video. Remember, this is general advice only, so make sure you read the disclaimer in the description below. Let's get stuck into it. Let's take a look at a common question I get asked, which is when can I access my super tax-free? And to understand when you can access your super tax-free, it's probably important to first understand when you can access your super. Generally, to access your super, you need to have at least reached your superannuation preservation age, which is based on your month and your year of birth as shown in this table. If you have reached your preservation age and are still working, you can have limited access to your super via a transition to retirement pension, which is otherwise known as a TTR pension. If you've reached your preservation age and are retired with no intention of returning to full-time or part-time work ever again, then you can have full access to your super via a lump sum or pension, or a combination of the two. If you're over age 65, you can have full access to your super regardless of your employment status. You just need to be over age 65. Another lesser known way of accessing your super in full is if you have had an employment arrangement come to an end after reaching age 60. For example, you may have quit your job at age 61 and started a new job with a different company a week later. The act of ceasing an employment arrangement after the age of 60 gives you full access to your super. So that pretty much covers when you can access your super. But when can you access your super tax-free? Well, basically, if you are over age 60, withdrawals from super, either as an income stream, TTR pension, or lump sum, are generally tax-free. If you are under age 60, the amount of your super withdrawal that is subject to tax is based on the tax components that make up your super balance. These include the taxable components and the tax-free components, and you'll usually need to phone up your super fund provider to ask them the tax components that make up your specific super balance. It sounds confusing, but it's really not. Importantly, all withdrawals from super, whether as a lump sum or income stream, must be made proportionately from each component. The taxable component portion of the withdrawal will be assessed for tax purposes, and the tax-free component portion will be received completely tax-free. For example, if you were making a lump sum withdrawal of $100,000 and your total balance consisted of 75% taxable components and 25% tax-free, then $25,000 would be received completely tax-free and $75,000 would be assessed for tax. If it was an income stream payment of, say, $1,000 per month, $250 of that payment would be tax-free and $750 assessed for tax at your marginal tax rate. But you do get a 15% tax offset on the taxable component portion. Also, when it comes to lump sum withdrawals, you pay no tax on the taxable component of the withdrawal up to the low rate lifetime index cap of $225,000. Keep in mind, this is a lifetime amount, not an annual amount. Withdrawals above that amount will be assessed for tax at 15%. And remember, this example is assuming that you are under age 60, because withdrawals over age 60 are tax-free. Something to be mindful of is that your tax component proportions in an accumulation account will change every single day due to super contributions and investment earnings, whereas tax component ratios in an income stream are locked in on the day the income stream commences. How's that? Clear as mud? In a nutshell, and as a rule of thumb, super withdrawals when over age 60 are tax-free. If you're under age 60, some tax may be payable. That's the best way to think about it. To add a tiny bit of complexity, if you do have an uncommon taxable untaxed component in your balance, additional tax may be payable, even if you're over age 60. Check with your super provider if you've got a taxable untaxed component. So there you go. Hopefully now you know when you can access your super tax-free. Make sure you like, share and subscribe for more videos on superannuation and retirement planning. If you want more exclusive tips, head over to superguy.com.au and sign up to my newsletter. It's free. If you want access to my premium superannuation content, head over to superguyhub.com superguy.com.au, where I'll show you how to build your own retirement plan with all the strategies that Australia's top financial planners are charging thousands for. Thanks for watching, and I'll see you on the next one.